There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We want to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for a free trading education event. Call now.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So I'm going to do a quick one because I have about 10 minutes until Apple opens up from its halt. First things first, market action. Third up day off of holding the 50-day moving average last Thursday. We talked about the breakout failure above 1573, came back in, held support. You look at the chart real quick. Look at the chart of the SPX. You will see, a little bit more to the bullish side. Okay, you talk about accelerated trends. This was one accelerated trend where we pulled back, then rallied off, held higher, made new highs. This same type of scenario here, broke it, came back, made new highs. Then if you want to extend this to where we were when we broke this, just say 1573 like we spoke about, you then came in, didn't fall apart, held the 50-day, held the longer-term trend line, and had a pretty nice 3-day healthy bounce back. So I know we've been potentially talking about this right shoulder building at this particular point. It still might be the case, but I think that if you're just putting your attention at the potential of this pattern, you're missing a lot of good trades along the way, and there have been. Yesterday, home builders held support, talked about it, then had a nice healthy move. You look here, you look at this 3-day pivot range. Yes, was this potentially a head and shoulders pattern? Looks like it could have been, but what did hold? The neckline, what held? Nice support. It looked like it was trying to break below it and couldn't. And then you have a nice bounce back. Okay, so at this point, it looks more like a consolidation than a topping pattern. So if you happen to have sold correctly when it broke this accelerated trend line right here, remember we had two of them, there were spots to potentially test that you never knew what was going to happen, but there wound up being some decent moves just like this. Yesterday, financials, same scenario. Financials came in, came below the 50-day, then came back above it. A lot of red dog reversals in some of the brokers yesterday. A lot of people were talking about Bank of America and Citigroup. We had, I think, both of them, or at least Citigroup, went off the charts. Nice, healthy move back. This right now looks more like a channel now where, we're holding support. Not saying it's going to blast through highs, but definitely, if it was weaker, what would have happened here? It would have been contained in the bottom end of this channel. So right now it's back right up. Good continuation. In Citigroup, you look at Citigroup right here. I don't know what I just did with the, the colors, but you could see it right there. This is, Citigroup where, it came in, held the 50-day. This is what I went long yesterday. Nice move to the upside. Looks like it's in the game. Bank of America was upgraded today also. We look at chart patterns, and this was your 995 core long. Broke out. It's been consolidating, did a move to the upside. Market wasn't ready for a full breakout, so you had to move back down to support, which held, and now it looks like it's back in the game with a little sideways action above 1190. Perhaps it goes again. I like this long term. Also, as far as earnings, Netflix came out. Really nice move again. This was last quarter. I'm buzzing right through this because I don't have a lot of time. Here was the last gap up. It continued. That was your little flag there. And then overall, held in very well during the corrective process. And there you go. Gapped above the 197. So that was your buy area after hours. Nice little trade. A little choppy today, but overall decent. Tomorrow we'll look at, today's high and the low and see if it needs a few days or if it goes again like a second day like we saw with Netflix, but we'll see. LinkedIn got frisky. A lot of people thinking this also traded very well with Netflix last earnings quarter. Gapped up, continued. Nice little follow through right there. All in all, held higher, held the 50-day today. We talked about on the price point sheet being a nice buy above, 182.83. Didn't blast through highs, but look at the size of the move. So I would say little sideways consolidation. This thing could be 200. Maybe it opens up tomorrow. We'll see what happens. Triple D. Like it, first up day, little bit of a conference going on. Maybe we see something positive out of there. Nice descending channel. Day one, I like to buy it day one. SSYS also day one. Not a leader right now, but this group held support, held higher, and then today was a decent day one near the high, so it looks okay. You saw a little bit of toppy action in like a Celgene and some of the others where you had a small red dog reversal after a nice trend. So this reversed here. So some guys who wanted a little bit of a cute short, they got one. Maybe it comes into the 8-day. You also had Amgen down after hours. Retail still looking good. RTHs held the 8-day. Looks like one of the first groups that's going to make new highs. You look at Walmart. Walmart's still looking healthy, right back at the highs. We talked about Walmart above 72. We've talked about it at 74. I talked about it last year, as my retail stock of the year, and it still looks great. Target looks okay. Lulu had a big move yesterday, then today kind of closed off the highs, but still looks okay. And then let's just get into Apple. Okay, Apple's been trapped in this trend for a long time, getting battered and bruised. They came out with earnings, looked okay for this quarter, which a lot of people, the whisper was like a lot lower. They came in above 10, revenues and margins were good. They did guide next quarter down. They did announce a nice size buyback, more than the actual dividend. Dividend, I think, is like a 3% or so yield. So I'm not exactly sure if it's enough to blast it off. But we'll see. You have a level right here, 419. If it opens lower, I don't think it was too weak, where it's going to break below 385 and head down to 355. But overall, I think it was kind of lukewarm. I think, guys who bought puts might lose. Guys who bought calls might lose. Maybe a call spread will be okay, or a put spread. We'll see. This is your inside range, 419 to 385. This is where it closed. If it goes negative and starts taking out the close, on the halt, or on the open, maybe it's a buy up to 419. If it hovers by 419 and acts well, who knows? Maybe it's enough to get it up to this 437. If it gaps down, into this, this is right here. You have 391, then 385. That's your support. If for some reason it breaks below that, you really have nothing, to the left until, this lower area, which comes into play right around 350. I don't think the report was that bad that it would get warranted break 385. I don't know. Everyone's kind of speculating right now. I kind of think it's going to be, it's decent enough where it might go up a little bit. It's not going to be a blockbuster, and it might be just a churny trade back and forth, which will be a lot of what Apple's been since the high here. Apple's given us a few, places to exit along the way here. Then finally a red dog reversal right here that led to a nice move that didn't get held up, and blah, blah, blah. Lo and behold, we don't have a lot of time here. Here is your inside range. Let's see where it opens. If it opens lower, maybe it puts in a pivot low, buy it after hours versus that pivot low. Here's your two areas of support. If it opens down like $6, $7 and starts to take out, the close, maybe you get a nice push up to 419 for a trade. Tune into the radio, tune into me and Sperling, because we'll be all over this. I got to go right now. Scott Redler, T3 Live, I wish you the best of luck. Be here in the morning to help guide you through basically where things are opening. But overall, yesterday or early in the morning, I talked about, the Bulls have a case, the Bears have a case. It seems like the Bulls have been, a little bit more on top of the case, so to speak, as there's been some nice setups and, a lot more to do from the long side than the short side in the last 2 days. And, if you had high level stops, you've maybe bought a little bit in the 50-day. Same way if you covered in the 50-day, you've had the right to be flexible. And I'd still see a lot of good setups versus having to pick whether or not, the macro direction of the market is going to warrant an intermediate an intermediate correction versus what the macro trends are telling us, which seems like higher prices. See you in the morning.